I guess good afternoon, everyone. How are you guys doing? It's a bright start to the morning, and we've got an action-packed panel here. When these guys told me I had to moderate this group, I actually had to get prepared for this session because some of these guys have been in the news lately. They've raised lots of money, and I was congratulating them for having made it through 2015. So I think in some ways, the fun has just begun for many of these folks here. Just to put things in context, our discussion today is about really the trend that seems to have turned from the free availability of capital, the fear of missing out, lots of deal activity in the first half of 2015, then starting to see some slowdown towards the end of 2015, and clearly a view that people are going to focus a lot more on unit economics, profitability, in a lot of ways saying, show me the money, let me make sure that I'm not just putting more money behind bad money. So in a lot of ways, I think the data does tell the story. 2013, the Indian market, there was about 1.2 billion that came in venture. 2014, it was 2.2 billion. And 2015, excluding some of the strategic money, it was 5.5 billion. So that just tells you how much capital has come in the last few years. And I think clearly, investors are now starting to focus on saying, how will I make some money? And there are certain sectors that have drawn in a lot of capital, including hyperlocal. So I think what we're going to try and do today is, get different points of view across horizontals, hyperlocal, grocery, and other services. So I think just quickly we'll start, with Abhiraj. Let's talk a little bit about lessons learned in 2015. You want to touch on whether it's fundraising, customer acquisition, operations. What are you guys doing differently, or what were the lessons learned for you?
Yeah. Thanks, Rahul. I think overall, you were right. I think 2015 was basically about survival. In some sense, I look at the journey of UrbanClap. If it's a marathon, these were the first sort of 500 meters. You had to get out of the pack, otherwise you just get trampled. And I think as the year ended, even when I took a session with the larger company, I told them that, look, this year has ended. A lot of things have happened. We've managed to get to a certain scale and get to a certain capital raised, where we've given ourselves a fair shot now at real company building. But it's like the journey starts now. So let's get deeper into our categories, deeper into integrating with our suppliers, significantly improving the customer experience. Because fact of the matter is that in all big spaces, at the start of 2015, you would have had maybe 100, 200 companies. At the end of it, you had maybe 2 or 3. So now I think the challenge for those 2 or 3 companies is to really go deep to improve the promise and build a real company in the process.
Let me just ask you, you were successful in fundraising. What's the one reason that your investors gave you around saying, yes, I'm willing to back you?
That's always a hard question to answer. I think quality of the team that we had managed to create in a short duration of time, and the quality of our execution. I think in a very short duration of time, we've been able to basically get together a great team. And in the certain cities that we were in, show some traction, show real company building, etc. So show the promise of the future.
Okay.
Yeah.
So it's still about the people in a lot of ways.
Absolutely, I think so.
Okay.
I think it's still about the people.
So Kiran, coming to you, your brand has been around forever. You've had to, in some ways, reinvent the business given the local context. How do you, what was 2015 for you, and with all the noise around, how do you say, hey, we're still here, remember us?
Actually, for us, 2015 was a year of great discovery. We figured out a lot of new tracks. So we've always been a real company in the real world. We've actually struggled through the phase when people didn't see growth in it. So it was like we went through a phase of rediscovery. 2015 for us was identifying those 1, 2, 3 tracks, and pleasantly either they're in-store or hyperlocal. And that's actually been a big learning. We've been struggling with it for 2 years almost, but I think 2015 was the year when we actually we can say now that we have a couple of models in place which are clearly scalable and profitable, bad word in this room, but profitable in the very near future. So, I mean, in that sense, it's been a great year of discovery for us.
You've also had this legacy of merchant relationships. Were you able to translate any of that into business, actively, or did that give you any leverage last year?
Yes, actually, so it's about the merchant business in India is not about. So the merchant doesn't trust anybody who walks in and says, "I'll solve everything for you. I'm your God and I'm going to tell you." So he's been running his business for so many years. He knows his problems. He knows what's happening in the digital world. He is aware and is concerned about the shift, and he wants to catch up. He wants to be part of it. But he's not going to take whatever you give him, and he's not the guy who's going to figure it out himself. He's a smart guy, but he needs to be given specific solutions for his real problems. In that sense, I think we took about 2.5 years to figure out those sweet spots. And I mean, last year was the year when I can clearly say we figured out a couple of spots which are like working very well for us right now.
Okay. So, Gajinder, in some ways, you're the youngest company of the lot. And so I'm curious, the space that you play in, which is a marketplace, and you picked a few categories. You led initially with payments, and now you're doing a lot more. How do you find room for yourself in a world where there are so many big players? How do you actually go into the merchant and say, look, you should use us as your preferred partner? So what are those insights that you found that the larger players were not paying attention to, and really creates the foundation for you guys to do more this year?
So basically, what we started with something related to doing marketing, hyperlocal marketing. We basically wanted to create a promotional engine, and then we started doing sales. We started doing promotions, and then we realized that this is not something that is working in hyperlocal, because hyperlocal targeting is very weak. There are no tools available to basically say that these are the segments, these are the locations that I want to target. So basically, we then pivoted ourselves. So 2015, we continuously pivoted ourselves to to do things which nobody else is doing, no other big player is doing. And then we realized that you go to all these store rollers, and about 99% of them will say that they want to do e-commerce. They realize that everybody is transacting on mobile, and they also see e-commerce as a threat. But they don't really have that kind of platform which can give them support. Not only in terms of digitization, but also in terms of pricing, also in terms of payment solutions that they require, and also in terms of the billing solutions that they require, right? So there were so many gaps on the merchant side itself that we didn't found the space to be crowded on the merchant side. That's why we decided that Paymango should be placed between merchants and consumers. We didn't want to go into logistics because there were so many logistics that were already there, trying to solve different kind of problems. And so we realized that what we want to do is we want to empower all these merchants. And if in every for example, Big Basket is doing grocery, right? And I mean, so they are very close to consumer. They have their own supply chain. But in all these categories, so there are these categories where the ASP tends to be low, where the margin tends to be low, and where the logistic cost in the end, logistic costs is significant, right? You can't ignore it, and you want to be so it's very important that that transaction is happening very close to where the consumer is, and that is what the strength of these store rollers have always been, that they have been near to the consumer, and that is the strength that we want to exploit even in our play.
Okay. So, Navneet, you had an interesting year. You went head-to-head with Shah Rukh Khan. So that's been an interesting journey for you guys. But on a more serious note, you guys are going after a very large category. There's probably 2 or 3 well-funded players. What did you take away from 2015? And we'll talk a little bit about the playbook for the current year. But you and I had breakfast a few months ago. We talked about what was going on. So what are the lessons for the group here?
I think the biggest lesson for us has been that the best customer you get is basically through word of mouth. rather than going after customers who basically come to you for discounts and then never come back. It's probably better to sort of get customers who really come to you for the value proposition that you bring to them, and then they keep coming back to you. Acquiring customers is not cheap, it's expensive. For everybody, whether it's a marketplace, inventory or anything, any customer facing business, the customer acquisition costs are really high. So getting the right quality of customers is fairly important. You're right, in our category, we've basically gone ahead with the Shah Rukh Khans of the world. Probably we should have Salman Khan on our side, but we don't have it. But
I hear Amir is looking for a job as well. So.
That's true. But I think one thing is fairly clear. Given that this is a very large category, mother of all categories, I think there's enough space here for 3 or 4 or 5 big players actually. And in the end, the quality of service, how you're able to take the merchants online, how accurate is your data, how good are the products that you're giving to the customers, how is the customer experience overall as the customer sort of experiences your whole delivery system. I think that's going to be very important. For 2016, our playbook is fairly clear, just focus on quality of service.
So beyond customer acquisition, how complex is logistics for you? Because it seems like, people's expectation, they want it today, especially things like groceries. You don't have a lot of flexibility on delivery. What was your single biggest challenge for 15?
So on the logistics side, actually, it was not that big a problem, given that before starting Peppertap, I had a logistics business, so understood that field quite well. The way we had set up our logistics was very much aligned to sort of delivery within 2 hours, hyperlocal kind of cells which could deliver from the store to the customer within 2 hours. And today, I mean, we deliver more than 98% of our orders within time. So logistics was never a problem. The problem is basically the quality of data at the merchant side. Solving that problem has taken a longer time than we expected.
Interesting. Okay. So Saran, you guys also recently raised money, and in a lot of ways, the 2 big boys in the on-demand space are here. Did you find raising capital last year, kind of trying to show that you had a working model? Why should people back you? Is this real? Will you ever make money? How did you get past some of those questions? And what was the promise that you made investors, as an example?
Yeah, so I mean, a key part of the diligence that happened during the fundraising actually was sustainability and showing or demonstrating sustainable growth. Meaning for every incremental or new service or order that we were getting or booking that we got, we were able to fulfill it in a way that we were not losing money on that. So it was actually one of the key parts. The second part, which I completely agree with Navneet here, was the overall sort of focus on the customer. So basically, just coming back to, without being repetitive, the learnings from that was being able to demonstrate that the money that we were spending, are we being very, very sort of prudent in terms of how we were spending and where we were spending? Meaning, do we know exactly why we are spending, and is it actually serving an objective?
Okay.
Which wasn't happening maybe prior to, so what that fundraising basically brought to light was we need to be much more fiscally prudent in terms of how we spend, where we spend. Was it the most efficient way we were spending that money? Could it be spent in a much more efficient way? That was one. The second piece was actually focus on the customer, because somewhere in there, when we were growing, the kind of maniacal focus you need on the customer and solving for some of those problems, and I think got diluted.
Okay.
Right, so when you kind of scale at that type of breakneck speed, right, I mean, a lot of things get compromised. So one other thing was not to compromise on the customer experience, no matter what. I mean, if that means we don't grow, that's okay. So keeping your eyes on the customer and not get distracted by the market and what the market may be saying.
Okay. No, look, that's very honest, and I think it is hard because in a lot of ways the market is forcing you to move at a certain speed. Yeah. It's always hard to take a deep breath. But I think just to dive in a little bit, you talked about focus on the customer. You talked about also focusing on a few high frequency categories. Maybe you can share with the group here, You also recently made an acquisition, say, in the laundry space. Can you talk about, how you see this balance between high frequency and then maybe high margin? I don't know if those two are mutually exclusive, but it'd be interesting to understand how you find that balance.
Yeah, so for us, it's more about being relevant to the household, right? And we're obviously looking at our portfolio in a way where we can be as relevant to the household as possible for all their needs. From that perspective, laundry, beauty, fitness, some of these categories kind of work really well. And we made a conscious choice that we would actually go deep in these categories, and hence one of the acquisitions which we announced, which was MyWash, was that, you bring in a team that understands that understands how to solve the problems operationally, that actually has the same type of mindset, which is customer centricity. Because a lot of these things in laundry, there is a very, very deep logistics play in there. There is, sort of handling the clothes and such, right? So for us to be able to delight the customer, it seems like there's enough opportunities to delight the customer. And it's one of those categories which gets you it's a foothold into the household.
So are you comfortable sort of letting that be, say, a loss leader, if only to engage the family?
Yeah, so one of the other things is the unit economics in laundry are, it has to be solved through a lot of, there's a lot of technology at play, there's a lot of processes at play. So if we can break even at laundry, I think I'll be happy, to be honest with you. Just break even. Operationally break even, meaning for every order that we deliver, we don't lose money. Yeah, I think we'll be sorted.
Okay. So I think, I'll come back to you, Abhiraj. If you had to talk about the 2-3 key metrics, that you think are relevant for this year, right? How are you guys measuring yourself? And, in some ways, how do you keep your team honest? Saying, okay, you know what, guys, I'm not going to confuse you. It's not growth versus profitability. These are the 3 things I need you to focus on. Can you just describe, what that playbook looks like?
Sure. So I think the first and most important metric for us is quality. We are a marketplace where a lot of individual service professionals have come and partnered with us and are delivering those services. Therefore, the quality of our marketplace is directly proportional to the quality of the people. And in the Indian context, you have all kinds and types of service professionals. So we have to be brutally honest in constantly measuring the quality, overall quality of our supplier base, and removing suppliers if required. Like, for instance, this weekend, we went through a massive, sort of archiving process where we basically removed 5,000 of our 20,000 suppliers.
Wow.
That's 25% of our entire base. It was a tough call, but somehow in that growth, they had seeped in and become a part of our platform and were not delivering the kind of experience that we expected them to. So I think that's the first thing that we look at. The second thing then that we look at is gross margin per category. So every category that we look at, we evaluate it from a frequency and gross margin lens. If you're high gross margin, low frequency, you're attractive. If you're high frequency but low gross margin, also you're attractive. But if you're low frequency, low gross margin, you're not so attractive. And then the third is, probably the overall orders that we're fulfilling in the gross service value. So it's really in that order. Quality and customer experience is always number 1. Number 2 is the gross margins, and then number 3 is the overall number of orders and the gross service value of those orders.
And just tied to that, how wide, a set of services do you need to offer to actually make that relationship with a family meaningful? Do you see yourself touching a family 3 times, 5 times, 10 times a year? What's kind of the order of magnitude of that relationship?
Yeah, that's a good question, and it's a tricky one. Because I think per se services are not something that are very frequent. The ones that are probably just a couple. We've got to a point where we've realized that we should have lots and lots of services as an assortment, wherein most we will have a search and discovery angle. So we will help you search and discover high quality professionals. But in a few where we see either high frequency and or high gross margins, we will go deep, which means we will take care of the end-to-end fulfillment. and our promise will be that we'll get your job done.
Okay.
And since that's hard to do across all kinds and types of categories, we've picked a few. Overall, I would love to be in a place where our average user is transacting on UrbanClap once a month.
Do you see any dissonance in services that you provide yourself versus third party? And from a consumer perspective, the promise is the same, that UrbanClap is delivering. But how do you manage that? Because that's, it seems like one of the challenges is, do you go full stack and you just not do the others? Or do you do full stack and marketplace and hope that the marketplace guys deliver?
That's a good question as well. We do it in a very simplistic way. There are certain services where we believe that the consumer does not want to choose. They just want their job done. So if it's a plumber, a carpenter, you don't want to say that, hey, show me choices and I'll pick. Your problem is that you have a broken tap. It's not that you want a plumber, right? So fix the tap. And we've typically seen that these are sub 2,000, 2,500 rupees services where you're agnostic to who the supplier is, you want your job done. As soon as the ticket size crosses 2,500, 3,000 rupees, people, that transaction suddenly becomes important for people. So if it's something like a yoga teacher or a math tutor for your child or your wedding photographer, your customer would not accept UrbanClap deciding who's your wedding photographer, who's your child's math tutor. You want to be able to go through a lot of reviews, a lot of content, be able to make that decision yourself. And we can help you and aid you in making that decision. That's where we take the angle of a curated marketplace.
Got it.
So we always look at a category and say, is this something that the customer just wants done? Or is this something where there's a deep relationship between the customer and the service professional? And we have to enable curation and discovery.
Okay, no, that's... So, Kiran, we were talking earlier about the evolving needs of merchants. You talked about financing as one key lever that you're using. Maybe you can just describe, what you've done for your merchants and, how that's creating more stickiness or how that's allowing you to maybe charge a higher margin. What is that knock-on benefit of financing these merchants?
Yeah. So let me just summarize a few points before we move into that. So we don't do non-standard products. We're still scared to tread into the area that Housejai and UrbanClap have gone in. So we typically look for standard branded products in most of hyperlocal businesses. Currently, we are exploring with furniture, but that's still to scale up in that sense. So in terms of quality of delivery, it is consistent with the brand experience, it is consistent with the product, so it's very standardized in that sense, so that's not a big criteria. What we're doing is we are actually forking the supply chain to be able to aggregate orders at a local level and source it from a local merchant, which means we are suddenly upping his business, we are upping his capital requirement, we are upping his working capital, supply chain, sourcing capability, pricing ability, etc. so that we enjoy those benefits and we transfer it to our consumers so that they get the right product at the right price at the fastest possible delivery time. We've realized that merchants cannot invest in operations themselves, so that we do ourselves, and hence our operational parameters drive our business. So whether it's city-wise volume, whether it is merchant daily revenue, it is fill rate by day, number of orders that we complete on time. Those are the parameters, or those are the metrics that drive the business. So when the supply chain, so most of these merchants typically have a particular trade which they're doing from their physical store, which is restricted to the number of people who walk into their customers. Now suddenly they're digital, their volume suddenly has gone up. The merchant himself is not digital. His business has gone digital without him managing that presence. That's another discovery we did. Merchants don't want customer calls. They actually don't know how to handle it. Customer calling up and saying, this is wrong, that is broken. They're not in that DNA. We have to manage the customer experience. If we let the merchant handle it, it goes kaput. Merchant largely knows what products sell in the market, sources it right, knows what is the right price, he knows the market benchmarks, and he knows where to source it from. Those are his key capabilities because of his experience in the market, etc. And in businesses like grocery, we've seen it change hub to hub. Within a city, 20 hubs have very different profiles in terms of SKUs, etc. Now, with the shift in supply chain, with the shift in volume, we've realized that guy's financing ability is not very high. He has a particular rotation that he manages, and any blip up or blip down ruins his supply chain. So he needs cash back to him in 2 days, in 3 days, and even that didn't help. He needs extra funding so that he can block extra volume, which will sell over a period of 10 days or 15 days in terms of a pickup. So that's when we realized merchants want to grow digitally, see digital as an opportunity to grow their business, but they are all struggling with 3 things. How do I market myself? How do I, increase my distribution to service those new orders that I'm generating? And third, how do I even finance the scale up in my business? So that's when we went in there, and it's been quite a big surprise in terms of how that market is open. And strangely, the ecosystem has changed. It's not just the merchant. Suddenly, there are a whole host of lenders. There are about, the last time we filled up a room with about 40 people who, large companies, new startups, innovative models, social profiling to give credit worthiness, etc., etc. People, about 40 of them in a room saying we want to lend, and that day we must have listed down about 142 different products we can go to market with. But now that's another problem. There's too many products. We're trying to refine it, bring few which are sharp focused to few segments, so that I know it's a particular segment, I know what product to go to market with. So that's the financing angle.
I'm just curious, this sell is much more sophisticated, in your engagement with the merchant. How do you get your last mile guys to engage? Because it's almost like you're doing capacity building, you're trying to coach the guy.
Correct.
How do you transmit, what sits in a boardroom here to the last mile?
So we're a scale operator, right? So our man on the street goes to a market, he walks his beat and does his 6 calls or 8 calls in a day. He's interested in conversion and closures. You can't load him with product information. So he's not going to become a financial advisor or a distribution expert or a marketing expert. He sells simple products priced at a attractive point so that merchant needs are bang on in terms of targeting. And the minute you hit that, his conversion starts from going up from 1 to 2 a day to 3 to 4 a day. He earns more incentives. He's doing more calls. More merchants are signed up. We do the CRM or the onboarding of the merchant onto the product at a post stage.
Okay.
So that's the split. So the sale is targeted. The required details are collected on the spot. But the guy who's collecting it doesn't understand the details, nor the guy who's giving it. The guy who's giving it knows because he's asking for a particular product. But he closes the deal faster, walks the market faster. We get our lead or a trail of information with the data points that are required to profile that merchant in a particular way in the backend. We then match it to the lender specifically and give them a docket of say 100 or 150 or 200 potential applicants for them to close.
Interesting. Okay. So Gajinder, you obviously also walked the beat. You've tried to convert merchants. I'm curious, how do you think about the last mile with the merchant? How complex a sell is it? And you talked about being mobile first, if not mobile only. For a lot of these guys, they don't sit in front of a computer. How do you even get time with these guys? Most of these guys are running their own shop. So when do you actually go sell to these guys? And what's that conversion process like?
So, I think we have not found it difficult to sell to these merchants. These merchants, they understand, they have to be on e-commerce. We don't have to educate them for that. What do they need education for is, what they need to do to be enabled on mobile. And so the sales is pretty simple, right? So our sales guy closes in, tells it that you can get extra transactions from here, so that he's fine with that. And mostly the conversation is about the commissions that we negotiate with the merchant. And post that, our onboarding process is very, very detailed in the sense that we ask the merchant the catalog, what catalog he has, or we also help him digitize the catalog if he does not have a digital catalog. We have a master catalog from which we can just pull products to the merchant and get him live very fast, right? And we also have pricing strategies enabled on our backend. So at the onboarding process, we have a detailed onboarding process, so that once the merchant has onboarded with us, then basically the issue of pricing, issue of availability, all those issues are resolved. And in the sense that we also don't care for if the order is not fulfilled by the merchant totally. Availability is an issue that we are resolving at a different level. What we do is we basically then source the rest of the remaining items from some of the other merchants. And that's where the high merchant density in a particular market is helping us. right? Even if the order is fragmented, right? If a merchant cannot fulfill the entire order because of the low availability, or if he has not updated the availability. But what we want is that pricing should always be, very up to date. And that's where we basically provide him the entire support. That, we provide him support for digitizing, we provide him support for the pricing strategies, and we basically, definitely, we have our own benchmarks that we provide to the merchants, right? So with regard to that, what we are trying to say is that, again, our products are also very standard, like, Kiran is saying that, they are standard products, right? We are not into fashion, we are not into the space, where you have to go and see the product and then you have to figure out, okay, this is what I want. So people generally know what they want, and even when we are in the food sector, right, when the transaction is coming on the food category, people generally know that this is the guy from whom I want to order from because they have eaten it. But they generally, check out Zomato, etc., right? So the main point is that, then it's all about making sure that, once the transaction has come in, how we can fulfill it. And, having a large area of merchants in a particular location, that's why we are very, very focused on having a high merchant density in a particular location, helps us basically eliminates all these issues.
Okay. So, Navneet, you probably have one of the largest sort of SKU base out there, right? How are you thinking about the playbook going forward? What are the trends you're seeing in terms of consumer behavior? Are people starting with FMCG product and then evolving to, fresh food, meat, etc.? Where is all this going? Because, clearly there are people like your competition that's saying we want to do it all, right? And you've had this hybrid model to some extent. You're using third party. How do you see these two worlds playing out?
I think within these, the daily needs sort of categories, as you call them, there are high frequency and low frequency products. So fresh would be a high frequency product. So you would buy your fruits and vegetables, milk, dairy products almost like every 3 days or so. And you would probably buy once in 10 days your FMCG products. It could be personal beauty care, bathroom care, kitchen hygiene, and all those different things. For us, what we see is people generally come in and try out the high frequency items. And if they like the service, if they think, if they like the quality of those fresh products, they'll stick on and they'll start buying these other standard products also. So for us, I think the lock-in that comes in from the quality of fresh products that we provide to the customer through the merchant. Now, getting that quality right is also very important.
Sure.
Because you're working with these different merchants. Every merchant, as somebody earlier said, have their own procurement, supply chain and stuff, which is not standard. So the pricing is not standard, quality is not standard. How do you become competitive against the competition? Also, how do you provide better quality or at least at par quality with somebody else? So educating the merchants is very important. Our model allows us to sort of kind of put in a lot of orders to this one merchant because we make him an exclusive sort of vendor in an area. That allows us to have some control on what he does and what he doesn't. They start listening to us. But getting them to do exactly what we want doesn't really happen in a day or a month's time. It takes some time. The relationship has to be built. Our model is not where we bring in say 100,000 odd merchants and tell them, okay, whatever you want to sell, just sell. Our model is we curate these merchants for a particular area, and we say that this is what you're supposed to sell. This is the quality that you're supposed to sell. So we curate that quite a bit, and we'll do that going forward. So the playbook for us for 2016 is on 3 metrics, as you'd asked earlier. One is conversion. So when a customer comes onto the platform, do we convert him? So if we don't convert him, whether it's the price which is wrong or it is the product assortment which is wrong, so you try and find out that in that particular area and then correct that. Then the retention, which is a reflection of the quality of service that you provide. Once he's placed an order, how is the order fulfilled? If the retention is good, then you're doing good. If it's not, you're not doing good. And last is basically gross margins. If it's a high frequency order, as Abhiraj earlier said, if it's a high frequency thing, even though the ticket sizes will be lower, the margins need to be higher to be able to make money on every order. If it's something which is done on a low frequency, the margins are generally lower, but the ticket sizes are bigger. So you should be able to make money on those also.
Interesting. There's been a lot of debate about which cities to focus on, and there's been news about people pulling back from certain cities as well. What would you advise people here? Do you focus on a high density, upwardly mobile area like Gurgaon, or do you pick a tier 2 city, try and make the model work there, and then build from there?
So it'll depend on what product is it that you're selling, depending on what kind of customers will actually find this product very attractive. So in terms of groceries, everybody buys groceries, but the added element that somebody like us brings in is the convenience. So people who actually value convenience will be the ones you should target. So we had expanded to like 10 different cities, and right now we've just recently pulled back from 6 of them. The reason is, 2016, as we all know, is going to be a tough sort of time from a fundraising perspective, and a hyperlocal grocery business is a low margin business. So we are under no illusion that we're going to be profitable in 2016, and we will be burning money in this year. So the choice was to whether we sort of keep on burning money in these 10 different cities, or sort of go in depth in the top 4 markets that we had. And we took the hard call to sort of say, okay, we'll just focus on these 4 markets. We'll actually build depth here, rather than spreading ourselves too thin.
Is there an opportunity to build brands under the umbrella brand for categories like fresh, where really, vegetables don't necessarily come fully packaged and branded? Is there an opportunity to create some stickiness there, or build something?
I definitely think so. So that's something we're already doing at Gurgaon. We've not come out with the brand yet, but we're already sort of standardizing the quality and trying to integrate the back-end supply chain, procuring directly from, say, something like Azapur Mandi, or even, say, farmers. That's something we've just started doing, and we've seen quite a bit of positive customer response on that. So I think that's definitely going to be an opportunity in the future.
And at what scale, do you have leverage with the FMCG guys? Do you ever bump into them, and are they threatened by you guys?
So no, they're not threatened. Actually, they see us as a sales channel, to be honest. So FMCG guys basically say that, look, we know that this is definitely a big part of the future. We would like to find a way where we can work together. So right now we have brands who come to us and say that, okay, I'm going to pay you this much, why don't you sort of put up a tile for my brand on your application, and all my products basically being highlighted there. So that's something, I think it's a synergy rather than competition there.
Interesting. So, Saran, you guys just, raised a round of funding. If you had to look out 12, 18 months from now, and, I'm not sure whether this will get you to profitability or not, but what do you think the story is going to be 12 months from now, or 18 months from now, as you go out to raise more money or continue to build? What would you like to have done in 2016?
So again, I may sound repetitive because we have really smart co-panelists here who've kind of pretty much mentioned a lot of things. The story, honestly, the top-level storyline is going to be, without going into a lot of the financial details, would be lots of happy customers on the platform who are transacting enough, and all of this happening at in a sustainable way, which is kind of a top-level storyline, right? And then you dig deep, and then you have the same set of metrics. The only difference is, for us, the quality of service is a combination of a whole bunch of input metrics that we look at. Meaning, I would not look at NPS directly, as an example. I would look at the composition of NPS and say, okay, what are the space that we are in that space from a customer standpoint. Again, everything starts from the customer. What are the kind of things they value the most? And we put a measurement against each one of those input metrics and see if you're continuously making that better. So case in point for us would be, say, on-time arrival, followed by the quality at which you complete that job, right? So predictability of that arrival time and the quality at which you finish the job. Say those were the 2 inputs. Then we would actually just just deeply focus on what percentage of my jobs am I actually showing up on time, and am I actually, again, some of the learnings we had from Flipkart was the reason it worked back in the day, which was 2011, 2012, was just that customer centricity where you delivered that order, you actually exceeded the customer's expectation. You promised 2, you delivered in 1. And that was the sort of the backbone or the foundation on which that company was made.
Do you think we've actually done ourselves a bit of disservice by raising the expectation level too much?
No, I don't think so. I think, I don't know, I don't agree with that.
Okay.
There was no reason why you could not have met that expectation, or you continue to meet and exceed a customer's expectation. And I'm talking purely from a Flipkart standpoint now, right? That was a value, that was a differentiation in the market. Actually, going back to one of the learning, right? So you got to protect your differentiation. What happened is when you pivoted to that marketplace and all of that, right? That differentiation got diluted, people caught on. Now everything looks the same, like, give or take. Right now it's a question of, a lot of other things that come into the picture. And so from a Flipkart standpoint, I personally feel that you've not protected that differentiation well enough. Meaning, why didn't you sort of continue on that journey and actually go solve 1 hour delivery at scale? Go solve, like, then the choice of business models and the choice of things you would have to make would be very different, right? Versus the choices that were made.
Sure.
So, no, so I don't think we've spoiled the market. I mean, we spoiled the market on the product commerce side from price expectation standpoint, I think, because the other differentiation is not clear.
Yeah, it's interesting because the headlines in the paper today were, physical store sales are at an all-time high because people have pulled back on discounting online. So I'm just curious, today we're offering up services to consumers at their doorstep, which maybe are being subsidized by third-party capital. But if you had to fairly price those, can you actually deliver that quality experience at a scalable level?
Absolutely, and the same thing applies for the home services space, right? This is a category I'm pretty clear I'm not going to be competing on price. But that means it becomes doubly hard now if you have to compete on service, right? Meaning the amount of focus you need and the kind of execution chops you need is like easier to sort of for me to sit here and say than to actually execute it on the field, right?
Okay.
But that's what we are all working towards, which is there has to be a differentiation, there has to be something which HouseJoy or the company in this space stands for, and that promise has to be discernible to the customer. And it has to be discernible in a way where that differentiation is almost palpable, right?
Okay.
So, yeah, I mean, that's the main thing.
Okay. So, we have a few minutes left, but just to summarize what I've heard is, pace yourself, focus on differentiation, focus on the customer. There's no mad rush. This is a marathon. And so we're going to be in this race for a long time. And in some ways, get the few basics right and protect that, right? So great. Unfortunately, we are out of time. Thank you so much for attending the session, and please join me in thanking these gentlemen here for their insights.